Startup costs. How much cash will you need? Starting a business may be an exciting process, but it costs money. When determining business startup costs, it's important to be realistic. Things like office space, legal fees, payroll, business credit cards, and other organizational expenses can really add up. If you're thinking about launching a new business, you should understand the startup costs you might encounter. Here's how much cash you will likely need to start your company. Before we begin, subscribe to my channel for more videos like this. How much money it costs to start a business. It's possible to start a business with a small initial investment, as little as $100, depending on what it is. For example, if you're starting an online shop or freelancing service, you likely won't have many upfront costs. However, other businesses like brick-and-mortar shops or those with W-2 employees could cost thousands of dollars, even hundreds of thousands, for location, inventory, payroll, equipment, rent, and more. According to the U.S. Small Business Administration, most micro-businesses cost around $3,000 to start, while most home-based franchises cost $2,000 to $5,000. While every type of business has its own financing needs, experts have some tips to help you figure out how much cash you'll require. Drew Gerber, CEO of the PR firm Wasabi Publicity, estimates that an entrepreneur will need 6 months' worth of fixed costs on hand at startup. Have a plan to cover your expenses in the first month, he said. Identify your customers before you open the door so you can have a way to start covering those expenses. When planning your costs, don't underestimate the expenses, and remember that they can rise as the business grows, Gerber said. It's easy to overlook costs when you're thinking about the big picture, but you should be more precise when planning for your fixed expenses, he added. Indeed, underestimating costs can decimate your company, said Cynthia McCann, founder and CEO of business plan software company Enloop. One of the main reasons most small businesses fail is that they simply run out of cash, she said. Writing a business plan without basing your forecast on reality often leads to an unfortunate and often unnecessary business failure. Without the benefit of experience or actual historical financials, it's easy to overestimate a new company's revenue and underestimate costs. How to plan for startup costs. 1. Start small. You most likely have high expectations for your company. However, blind optimism may cause you to invest too much money too quickly. At the very beginning, it's smart to keep an open mind and prepare for issues that may arise later. McCann said business owners should start with a bit of healthy skepticism. A prospective business owner should start planning a small business by simply understanding the potential of the business idea, she said. What this means is not assuming your idea will be successful. The best approach is to test your idea in a small, inexpensive way that gives you a good indication of whether customers need your product and how much they're willing to pay for it, McCann said. If the test seems successful, then you can start planning your business based on what you learned. 2. Understand what types of costs you'll have. The SBA states that there are various types of expenses to consider when starting your business. You need to differentiate between these costs to properly manage your business's cash flow for the short and long term, said A.L. Shinar, former CEO of cash flow management company Funbox. Here are a few types of costs for new business owners to consider. One-time versus ongoing costs. One-time expenses will be relevant mostly in the startup process, such as the expenses for incorporating a company. If there's a month when you must make a one-time equipment purchase, your money going out will likely be greater than the money coming in, Shinar said. This means your cash flow will be disrupted that month, and you will need to make up for it the following month. Ongoing costs, by contrast, are paid on a regular basis and include expenses such as utilities. These generally do not fluctuate as much from month to month. Essential versus optional costs. Essential costs are expenses that are absolutely necessary for the company's growth and development. Optional purchases should be made only if the budget allows. If you have an optional and non-urgent cost, it may be best to wait until you have enough cash reserves for that purchase, Shinar said. Fixed versus variable costs. Fixed expenses, such as rent, are consistent from month to month, whereas variable expenses depend on the direct sale of products or services. This is a reason that comparing the best credit card processing providers is so important. Processing rates are a variable cost that you'll want to regularly review to ensure you're getting the best deal. Shinar noted that fixed costs may eat up a high percentage of revenue in the early days, but as you scale up, their relative burden will become negligible. Indirect costs. Most common startup expenses. It's important to understand the different types of costs you'll have as a new business. Theoretically, it's good to take note of what costs are fixed, variable, essential, and optional. But let's get concrete. Here's a short list of costs you'll likely have as a new business. Web hosting and other website costs. Rental space for an office. Office furniture. Labor. Basic supplies. Basic technology. Insurance. License or permit fees. Advertising or promotions. Business plan costs. 3. Project your cash flow. Another critical aspect of a startup's financial planning is to project the business's cash flow. William Brigham, director of the New York Small Business Development Center in Albany, advises new business owners to project their cash flow for at least the first 3 months of the business's life. He said to add up not only fixed costs, but also the estimated cost of goods and best and worst case revenues. If you borrow money, make sure you know not only how much you borrowed, but also the interest you owe, Brigham said. Calculating these costs puts a floor on the revenues needed to keep the business viable and provides a good picture of the cash necessary to start it up. This is an essential step in maintaining your business's financial health. Without being realistic about your cash flow and debt, you won't be able to get your business off the ground, especially as other costs begin to build. Gerber recommends starting a business without borrowing at all if possible. He said that borrowing puts a lot of pressure on any business and its owners, as it leaves less room for error. Do your best to explore all of your funding options. If borrowing is your only option, work closely with your lender to ensure your business is financially able to handle the commitment. Keep in mind that when it comes to small businesses, personal assets are also often on the line. 4. Figure out your financing methods. Once you've determined your costs and projected your cash flow, you'll need to consider how to pursue financing. How you obtain funds will affect the future of your business for years to come. Personal savings, loans from family and friends, government and bank loans, and government grants are just a few potential funding sources. Many companies use a combination of different sources. According to Herndon Davis, mortgage loan officer and real estate agent at Mortgage Real Estate Services, most startups are self-funded. However, there are other options. Additional funding can come through establishing business credit and different lines of credit through piggybacking scenarios, Davis said. There are also small business loans and angel investors willing to step in at certain stages. At this point, your startup should show established clients, customers, growth since inception, a unique positioning in the marketplace, and a clear business plan on how to grow with the additional funding. To determine how much money you'll need for your startup, you must first define all the types of costs you'll be responsible for and focus on the most necessary ones first. How much cash will you need? As you've learned above, the money you'll need to start your business depends on various factors. Opening a brick-and-mortar store with expensive rent, requiring high-quality equipment, might cost hundreds of thousands more than offering freelance services online with no initial investment. Before pursuing your business, analyze your potential costs and determine whether you're financially ready and committed to the journey of entrepreneurship you desire.